Today, and particularly at the Open. We're joined now by Cameron Peacock from IG in Melbourne. Cameron, good to see you there. What do you think? The SPY futures up, what, 0.2% or 7 points? What's the IG call for the Aussie Market Open?
Yeah, good morning, Bridie. Look, with little in the way of offshore leads today, I think our market's set to focus on local issues. I think there's going to be a lot of focus on when and how much of yesterday's rate cuts is going to pass through to consumers. Is it going to be enough to help the Christmas shopping season? What do we make of the stubbornly high Aussie dollar, and what's today's GDP data going to reveal? I think they're going to be some of the key things on investors' minds today. Given the sell-off we saw yesterday afternoon after the rate cut, where we finished down 0.6%, we are looking at a slight correction for our market today, currently calling it up about 7 points or 0.15%, around that 45.10 level. It was perhaps a little bit surprising yesterday afternoon to see the Aussie dollar rising and the Aussie market selling off, but I think that comes down largely to positioning. If you think about it, going into the rate decision, there was a lot of people short the Aussie dollar. It was a very neutral statement. There was no clear indications of any imminent further easing in the first part of next year, and hence we perhaps saw a little bit of a bit of a short covering, I guess, taking place. And then in terms of the actual market itself, it slipped from being down about 0.2% to down about 0.6%, and it was interesting. A lot of that came down to a fall in some of the retail names. Heading into the announcement, we had Myer trading up about 5%. It finished flat after the announcement. We had David Jones up about 2% heading into the announcement. It finished flat. Why was that? You'd expect retailers to be amongst some of the biggest beneficiaries of a rate cut. Maybe it's the market's saying that it doesn't think that the flow-through effects are going to be there in time for the Christmas shopping period. I'm not really sure, but there's some of the things I think the market's going to be wrestling with today.
Yeah, absolutely. I guess just looking at the offshore lead, as you mentioned there, not much to go on. Well, why do you think that was? When we've got still the fiscal cliff going on, we're seeing a lot of these US companies bring forward their dividend payments, making special dividend payments to try and get in before there is any tax increase on dividends. Why do you think markets were so sort of lacklustre offshore overnight?
Well, for those very reasons you've just mentioned. I mean, the fiscal cliff issues just going on and on and on. I mean, we saw stocks in the US soaring last night. Obviously, yesterday afternoon we had, or yesterday at the end of the US session, we had the Republicans come out with a $2.2 trillion savings plan or deficit reduction plan. That was quickly knocked back by the Democrats because it didn't impose any tax increases on the wealthy, and so we're stuck at this situation of political gridlock again. And I think a lot of people have just sort of thrown their hands up and are now sort of questioning how they want to position themselves heading into next year. I think one of the really interesting things to consider is where is all this special dividend money going to go? A lot of companies are obviously paying these special dividends, handing cash back to investors prior to these potential tax increases. I think the real question that's going to be interesting is where is that money going to go? Is it going to go back into equity markets? Is it going to be parked in bonds? Is it going to sit on the sidelines? Is it going to go into consumer spending? And I think that can really that's going to be a really important question to ask over the next couple of weeks.
Interesting too, I guess, just on that fiscal cliff. I know we talk about it constantly at the moment, but President Barack Obama speaking this morning and saying, well, in the early hours of the morning our time, saying that there's not enough time this year to come up with an overhaul of the US tax system and entitlement programs as Republicans want as a condition for an agreement to avoid the fiscal cliff. I mean, that kind of says it all, doesn't it? What do you think the chances are of this being deferred over into the first quarter of 2013?
Yeah, look, it's interesting. I did read those comments by Obama. I mean, he said, let's increase the taxes on the wealthy and have that as a down payment on the tax system, and then we can look at broader tax reform in the first part of next year, sort of citing that there isn't enough time, to do it in the last sort of 3 weeks of the year. And the track record of Washington would suggest that's the case. I mean, these guys disagree on everything, so to make such major reforms in 3 weeks, I mean, it's just not going to happen. So I think the logical thing and the most probable outcome is that they will agree on some short-term stopgap measures, buy a little bit of time, and then address some of these bigger sort of tax loopholes and entitlement reductions in the first part of next year.
And just an interesting view we were exploring with some of our analysts this morning too was the sense that yeah, okay, everyone's focused on the fiscal cliff, but there's a massive hippo or elephant, if you like, in the room, and that's the huge deficit that the US has, and whether or not that's ever going to be addressed. What do you think of the fact that, I mean, that's still looming there large, and next year, I mean, sentiment could turn on a dime, and if the focus really looks at that?
Yeah, look, I think the two issues go hand in hand. I mean, if nothing is done at the end of this year, we get automatic spending cuts coming in. And, you know, I think I saw a survey this morning on CNBC, 36% of Americans think going over the fiscal cliff might actually be good for the US economy. Why is that? I'm not really sure. Maybe it's the fact that these spending cuts do kick in and bring into check the long-term deficit issues that the US has. I think that, as I said, the two issues go hand in hand, and, you know, they need to come up with a long-term plan to bring this deficit back into, you know, or back to sustainable levels. And I think that's why it's unlikely that anything's going to get done this year, because to actually achieve a long-term deficit reduction plan, they do need to have, you know, larger scale reforms to their tax system and to their entitlements program. And, you know, that's just not going to happen in 3 weeks. And so I think, you know, they'll come up, as I said, with some stopgap measures to get them through the next couple of weeks. Maybe, you know, give the markets a carrot to hang their hat on, so things don't turn pear-shaped in terms of investor sentiment, and then hopefully in the first quarter of next year they can come up with some of these longer-term structural issues to actually reduce the deficit in the longer term.
Just quickly on Europe as well, I mean, the euro, 7-week highs there against the greenback overnight, going above $1.31. What do you make of that? Is Europe really on the back burner now?
Look, I don't know if it's really on the back burner. I mean, it's been on the back burner, you know, several times over the last 3 years, and it always, you know, rears its ugly head at the most inopportune times. So I think, you know, we've seen, you know, Greece, you know, I guess agree some bailout terms with the IMF and the EU. You know, they've now announced their buyback program. We see yields, you know, come back dramatically across all these peripheral European nations. So I think that's given the euro a little bit of respite, and on the back of that, we've seen the euro rally, you know, to these, I think what you said, 7-week highs. So, you know, that's certainly encouraging. But, you know, whether or not, you know, January, February, we have another blow up and we see the euro, you know, trade down to the 125, 126s again. Who really knows? I think it's just a moment of temporary respite, to be honest. All
right, Cameron, great to get your thoughts as always. It's going to be an interesting day, and as you said, focus really on local issues today. So, yeah, thank you very much for that. Well, of course.